Good afternoon, ladies and gentlemen. It is 11:30 a.m. Here in New York, Eastern Standard Time, and today is the 22nd, Thursday, the 22nd of 2015. We're past the infamous October 19th, 1987 deadline, right? 28 years later, as I mentioned on my end of the day report. I wanted to make this short video cast because it's extremely critical for people and especially my members, okay, and free trial subscribers to understand what's going on here. To almost all of you, you guys have never witnessed this type of massive impulse fallouts and all this volatility, these massive dragon bullish formations, and this is where we are. And even if you've witnessed it, you've never really understood it. Look, I don't fully understand it, but I understand it a heck of a lot better than most of the guys at Goldman Sachs and people that you listen to on StockTwits and other forums. I'll tell you that right now. Okay? So the simplest way to describe it is what I've mentioned in my periscopes is that you have a substantial amount of institutional and retail players who just are not in the market. There's a huge amount of cash lying there on the sidelines, and they're seeing this market rise. Some of them are getting in. They're getting slapped down because of the Walmart sell-off here. Then you have the Valiant crash, crash and burn for 5 hours on the biotech side. And even then, through all that, the market rises. Look, I've been pointing out some very key technicals. In my video cast last night, I talked about the fact that technical discipline is the hardest thing you'll ever exercise in your life. Believe me when I tell you. Because emotional discipline is easy. Just say what you want, right? What your head's telling you. Oh my God, it's really scary out there. Let's get out and all kinds of good stuff. That's emotional stuff. Very easy. Technical discipline, forget it. So this is what I think is happening right now. These channels were drawn weeks ago, as you all know, right? And let me compress them a little bit so you can see what it's all about. So here we are. So we have a large, you have a trend line here attached to what from August, right? The bounce after the crash, right? This was August lows, and this is, I think, where we're going for now. And that completes the pattern. And I talked about this extensively in my group and single coaching sessions. All right. If there's a big gap here and this gap wants to get filled, and that gap is around, let's say around two, lower gap, read it yourself. Okay. Seriously. So right there between 207 and 209, 208. I think that's where we're going. Look, this gap got filled big time. It got filled big time. It was in there yesterday, fell apart because of the biotech thing. Now here. Now here is something key to keep in mind. The thing that keeps me manage my trades and not freak out and helps me to dollar cost average down, and the S&P calls that I dollar cost average down all the way from 6.7 down to $2. Bought a lot around 2. They went past 11 today. I sold most of them out between, I staggered it out. Average cost for around 10, 9. Okay? I shot some out over 11. So I don't need to tell you all this stuff. You guys got to feel it yourself, okay? So what we're seeing here is an overbought condition, no question about it. But look at the pattern here. And this is one thing I talked about extensively in the group coaching session or individual coaching session that I did on Tuesday evening with a few of my members, Fish Eyes. And I put that one up there. Yeah, I put that one up there for free for people to see and benefit. For all the stingy members who don't want to pay a few bucks for my time and my to share my experience and everything, well, you got it for free, okay? So, and again, I'm not being nasty. I'm just being straightforward. So the bottom line is that this is what's going on here. At this point, we are overbought. Does that mean that? Let me change the color here so people can see it. There. Does that mean that we're just going to crash and and reset? Sure, it can. But I'm talking about this week, going into Friday, options expiration. The most I will do, this is what I was saying. What keeps me on track are these moving averages. 3450 moving averages, the 5-day moving average, which is the trader's special. That's this line here, this magenta line, this one right there. They're all pointing up. Even your kid can tell you they're pointing up. But what do? We're like, oh my God, it's over. Now, if these lines had turned yesterday because of that big fallout, then it's a different story. Then I would have changed my I'm technically disciplined, for God's sakes. You know, people just come out and say, "Oh, it's a reset and this and that," and you know what? I'm not making fun of them, but don't just make stupid comments just for the sake of it. Resets have made me huge amounts of money, and I don't need accolades from anyone telling me I'm the master or something like that. Okay? The point is that I'm just showing you. So at this point, that didn't. It's up here. So a pullback would engage the 50 and the 34, and the pullback would be healthy, in my opinion. Back into the gap fill and check the lower gap that comes around these levels here. You have your own charts. You look at it yourself too. So that's what I'm looking at. A pullback here would be nice, and then. Let me explain this here. Let me clean this out. Okay? So if we entered this channel, here, and let me extend this line. Remember, these are channels, right? Channels were drawn so to guide people. How you guide yourself and how you drive your car, that's up to you. So let me get the thing again. Okay? So if we entered this channel, ladies and gentlemen, we're going to hit the next gap real fast. Your heads are going to spin. You're not going to be in that trade, and you're going to hate yourself. You're still hating yourself, most of you guys, because you're just missing the trades. Okay? And a little pullback here and there, you're like, oh my God, it's all over. Why is that down? You name it. Right now, Valiant is down to 97 again. We traded that out for 9, 10 points yesterday, and this is pulling the market. I mean, not the headline market. McDonald's and all those companies are driving the market way higher. So anyway, so that would be a sharp move into this gap. Once it hits this gap and it hits this green trend line that I've drawn, sort of a rising wedge, then I think we hit some real resistance. However, over a period of time, I don't know whether it's in October, maybe November, okay, I would like to have this happen. Back in the channel, possibly scare the living daylights out of everyone, fill this gap again, test this, move from here. But one way or the other, it looks likely that the upper end of this channel will be tested based on what channel surfing, as I like to call it, that's what channel surfing does. Maybe that's the year-end stuff. Okay? So just passing it on to you. In the meantime, we're short-term overbought. Let me clean this out, and I'm going to show you a picture of the daily. Okay, here's a daily chart of the market. All right, here's a daily chart of the market. Let me shift my lines a little bit so I can touch more inflection points. And look what's going on. This is not that hard. Like I said, if you have young kids, even they'll tell you what's going on. The market wants to go frigging higher. Look at this candle here. It completely negated this was yesterday's bearish engulfing. No question about it. However, I saw many other things that didn't confirm that move. I look at 16 or 17 different critical indicators, including my swing charts, did not show that we're going to break down. I was right. So at this point, this candle should be respected. What does this exactly mean? It basically means that one way or the other, we are going to fill this gap. So if you want to play the swing trade, then you want to basically buy some ones, maybe November ones calls, buy a little bit. If it pulls back, then you buy. And of course, this has to hold. Remember, this has to hold. Below this, we're going to come to the lower end of this trading band, which I've showed many times right there, this one, this green line. And then, of course, that below that are these 50 and the 34-day moving averages. So anyway, so if this happens, it's going to happen rather fast. Why? Because this happened very fast. Remember, this is a pattern symmetry. Let me clean this out and show you. And people who work with me know this very well. This is a pattern symmetry, a massive dragon bullish formation that is in play. So if this pattern, this move here, has not completed yet, that's that move. Sorry, I'm running out of desk space here. That is the move here, ladies and gentlemen. Okay? This move. So if this fell apart like that, pattern symmetry dictates that patterns, just like human behavior, never changes. We're going to get up here. Once we get up here, the fight really begins between the bulls and the bears. All right? Just passing it on to all of you. Okay? So that's it. It's all for now. Review these things, learn for yourself, and most importantly, stop being so scared of every little thing that goes around you, and stop, if a technical chart is fine, okay, then stick to it. Swing it. There are people out here who buy things on a swing trade and then want to see it move every 5 minutes. It doesn't work like that. You want to do real fast trades, you gotta have serious seatbelts. I'm not going to say the other words, okay? Strap-ons. Because those are the ones that'll give you the $3-5, but then also take you down $2-3. So you don't want to do those. That's fine. In that case, do the swing trades. And if the swing trades are still intact, just the way the SLBs and stuff were, I said 78. Most people left it at 74 after I produced the buy at 72. Now, guess what? It's at 78 today, almost. And it's going to go to $80. So if you're going to say swing, stick to a swing time frame. 5 days, 7 days, 8 days, unless something dramatically changes. If the market gets up here within that gap within 3 days, then obviously the market's going to pull back. But and then you have to reevaluate whether your swing trade is going to be 10 days or whether it's going to be 3 days. Look, the market's a fluid animal. 1 plus 1 doesn't equal 2. All right? Be flexible. Do what you need to do. I'll put out some good trades out there. How you exactly manage it is your business, not mine. Because 90% of my trades within a given time frame arrive at the destination. And I'll stand by it. Thank you for listening. This is Clueless 8.